Warren Buffett explains the biography of share market must follow in September 2023. Warren Buffett, a legendary investor with a fortune exceeding $100 billion, offers timeless wisdom that can guide anyone seeking success in the world of investments. His principles remain as relevant today as ever, and here are some key insights supported by recent findings. Buffett emphasizes the importance of investing in businesses you truly understand and have confidence in their management. This means conducting thorough research to comprehend the company's products, services, and financials. This approach helps mitigate the common mistake observed in a study by Dalbar Inc., which shows that the average investor often loses money in the stock market over the long term. This loss typically occurs because people tend to buy when stock prices are high and sell when they're low. By sticking to businesses you understand, you're less likely to fall into this trap. Furthermore, recent data from Vanguard underscores the value of diversification. Their study reveals that a diversified portfolio consisting of various stocks and bonds has historically delivered an average annual return of 10% over the long term. Diversifying your investments across different businesses and industries increases the likelihood of your investment growing steadily over time. Buffett's enduring principles revolve around informed decision-making, patience, and a focus on the long term. By understanding the businesses you invest in, avoiding emotional reactions to market fluctuations, and diversifying your portfolio, you can set yourself on a path toward financial success, much like the Oracle of Omaha himself. Warren Buffett's time-tested investment wisdom revolves around the principle of long-term commitment. He firmly believes that the surest path to success in the stock market is to purchase shares in solid businesses and hold on to them for many years. This approach necessitates patience and the ability to stay calm when faced with market downturns or fluctuations. Recent findings from Fidelity lend strong support to Buffett's perspective. Their study reveals that investors who remain invested for a minimum of 10 years have a higher likelihood of reaping profits from the stock market. This favorable outcome is attributed to the stock market's inherent tendency to rise over time, even in the face of short-term ups and downs. While the stock market has experienced significant volatility in recent years, characterized by sharp swings both upwards and downwards, it's essential to focus on the bigger picture. Historical data consistently shows that, over the long term, the stock market has exhibited an upward trajectory. This underscores the significance of adopting a long-term investment strategy, as it significantly increases the probability of witnessing substantial growth in your investments. Buffett's philosophy underscores the value of endurance and steadfastness. By embracing a long-term outlook, you position yourself to navigate the unpredictable seas of the stock market successfully. This approach aligns with the historical data that substantiates the enduring upward trend of the market, making it a prudent and effective strategy for investors seeking sustainable growth. Warren Buffett's investment wisdom discourages attempting to time the market, a practice he deems inconsistent and nearly impossible. Instead, he advocates a more reliable strategy, identifying strong businesses at favorable prices and holding on to them for the long term. Recent data echoes this sentiment, emphasizing the unpredictable nature of the stock market and the futility of trying to predict its fluctuations. Backing Buffett's stance, a study conducted by the University of California, Davis, reveals a striking fact. A whopping 95% of professional investors fail to consistently outperform the market over extended periods. This daunting statistic underscores the immense challenge of accurately forecasting when the market will rise or fall. Consequently, focusing on selecting and maintaining investments in robust businesses becomes a more sensible approach. Buffett emphasizes the significance of portfolio diversification, which involves spreading investments around various asset classes like stocks, bonds, and real estate. This diversification strategy serves to minimize risk, particularly when one asset class underperforms. Recent findings from Morningstar support this notion, demonstrating that a diversified portfolio is less susceptible to volatility and market shocks, making it a safer bet for investors. In a volatile stock market where potential losses always loom, diversifying your portfolio emerges as a prudent risk management strategy, increasing the likelihood of long-term success while aligning with Warren Buffett's investment philosophy. By avoiding market timing and focusing on solid businesses, coupled with diversification, you can navigate the unpredictable terrain of the financial world with greater confidence. Warren Buffett's enduring success in investing rests on two crucial pillars: patience and discipline. He recognizes that building wealth through investments is a long-term endeavor, and he's willing to wait patiently for the right opportunities without succumbing to the hype of the moment. Recent research from the University of California, Berkeley, reinforces the significance of these traits. Their study reveals that investors who exhibit patience and discipline tend to be more successful in the stock market. This is because these individuals are less prone to making emotional decisions driven by market fluctuations, which often lead to financial losses. The stock market, as recent data illustrates, is frequently marked by volatility, with tempting opportunities to sell when it takes a downturn. However, for those who remain patient and disciplined, the ability to weather these storms becomes more likely, ultimately resulting in the growth of their investments over time. The lesson from Warren Buffett is clear. Success in the world of investing demands a steadfast commitment to patience and discipline. These qualities enable investors to navigate the unpredictable nature of the market and emerge on the other side with their wealth intact and flourishing. Various studies shed light on critical aspects of successful investing. A study conducted by Dalbar Incorporated underscores a common pitfall for the average investor: losing money over the long term. This unfortunate trend often arises from a tendency to buy stocks when their prices are high and sell them when they dip, driven by emotional reactions. Research from Vanguard points to the potential for financial growth through a well-structured investment approach. Their study indicates that a diversified portfolio, comprising a mix of stocks and bonds, has historically yielded an average annual return of 10% over extended periods. And this highlights the benefits of spreading your investments across different assets to harness long-term growth. According to a study from Fidelity, it emphasizes the rewards of patience in the stock market. Investors who remain committed for at least a decade are more likely to achieve positive returns. And this positive outcome aligns with the natural tendency of the stock market to trend upward over time, despite short-term fluctuations. Warren Buffett's timeless investment tips may appear straightforward, but they hold immense relevance in today's dynamic financial landscape. It's noteworthy that major stock market indices have displayed year-to-date gains, with the S&P 500 up around 10%, the NASDAQ Composite up approximately 15%, and the Dow Jones Industrial Average showing an 8% increase. However, it's essential to acknowledge the challenges at hand. Inflation has surged to its highest level in 4 decades, standing at 8.6%, which can erode purchasing power and impact investment decisions. Moreover, the backdrop of rising interest rates poses the potential for increased borrowing costs, which could influence investment strategies in stock and other assets. Additionally, the ongoing conflict in Ukraine introduces global economic uncertainties that can affect market sentiment. In light of these factors, it's crucial to recognize that the stock market remains a long-term investment arena. By adhering to Warren Buffett's timeless advice, such as investing in what you understand, holding on to good businesses, avoiding market timing, and diversifying your portfolio, you can bolster your chances at success. These principles provide a stable foundation for navigating the complex and ever-changing world of investing, allowing you to pursue your financial goals with confidence, even in challenging times. So, what are your views on all of this? Please let us know in the comments section below. And if you like this video, we would appreciate you giving this video a big thumbs up, and make sure you share it with your family and friends. And if you want to watch more videos like this, then subscribe to our channel. Thanks for watching.